Hey guys, welcome back to the channel. Hope you're all doing well. In today's video I'm going to be showing you my favourite method currently of taking profits out of a trending market, and it's based on market structure primarily. You're going to be looking for breaks of structure and then identifying the new most recent high or most recent low, and that's when you're going to be using a trailing stop loss to trail your profits in a strong trend. And I truly believe that this is one of the best ways you can possibly take profits out of a market when you're in one of those strong trends, and it also means when you are eventually taken out of the market, it's at the best possible point where that trend has now come to an end. Just a quick reminder for anyone new to the channel, be sure to like, subscribe, leave a comment, but most importantly check out the Instagram and also Discord server. Discord server this year has been doing incredible so far. I think we've been able to catch 4 trades so far, 1 loss which was reduced risk, and then also 3 wins. I think 2 weeks ago we had a EURJPY sell, which I actually take you through in this video, so you'll be able to see that. But we ended up with a final profit of just over 20% on that one trade alone. So, really huge percentages, and we're also getting a really nice community, especially within the VIP membership, which, is completely free to join. You just need to join the Discord server, send a message into one of the, various text channels, and I'll add you free of charge. It's, only asking for participation from all the members, which we're really starting to see now. So yeah, without further ado, as I said, let's jump straight into it. So guys, to be able to use a trailing stop loss, the first thing you're going to need to understand is just some basic market structure. To use a trailing stop loss, you're simply going to be following this market structure. So the very first thing you need to identify is what sort of trend you're in. As I said, the trailing stop loss I use in clear trending markets. So I always need to see a clear trend before I'm getting involved in any trades and before I'm using this trailing stop loss to take those maximum profits from the market. And obviously in this example, we've got a bearish market here on the left, and a bearish market is characterized by a series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And then on the right here, we've obviously got our bullish market, which is the flip side of that. So we've got a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and so on. And for the trailing stop loss that I'm going to be taking you through today, it's very simple. You're simply going to be following the market structure of whatever trend you're in. And for the example of the bearish market here on the left, you'll be following these series of lower lows and lower highs. And when you have those breaks of structure, so the breaks of the low in the bearish example, you'll be moving your trailing stop loss to the most recent high, which will be the highest point of the retracement. I will go into a bit more detail in the second example we go through, where we look at some more complex types of pullback. And I'll be describing to you how you can be slightly more aggressive with how you move your trailing stop loss and how you identify your most recent highs and most recent lows. But for the sake of this example and these very simple sort of pullbacks we have, you will just be following the sort of overall market structure. And yeah, I'll take you through that now. Basically, the first thing you want to do, the tool I use for it is a horizontal ray, as you can see down here. And obviously in this bearish example we'll go through first, you'll need to mark out your high, which is where the sort of bearish move starts from. And you'll then need to mark out your most recent low, which is the sort of low point of that swing leg and before the retracement starts. Now, as price is retracing, there's not much you can really be doing unless you're looking for trades within this range. But for the sake of just following market structure and using your most recent high and most recent low, you're going to be waiting for a break of that low. Obviously in this bearish market, if we're in a bullish market, we'd be expecting a break of the high. But in this bearish market, we're expecting a break of this low. And once we have the break of this low, we can move our low point to the lowest point of that second leg. And once we've had that sort of second leg, the next thing we can do is move our most recent high to the new most recent high, which will be the highest point of the retracement we've just had. So as you can see, we've got our new most recent low and our new most recent high, which is the highest point of that retracement. And the same thing, we're just sitting on our hands waiting for the market to show us what it wants to do. And once we get that break of structure to the downside, the break of the most recent low, we can then move our most recent low to the new low that's been formed. And we can obviously move our high to the new high, which is just here, the highest point of that second retracement we've had. And this would be our new high. And then the same process, you're going to just keep following this until the trend fails. Once we have that break of structure to the downside, you'll obviously move your low to the new low point, and you'll move your high to the new high point. And the reason we do this is because if price does then come from this point to flip bullish, let's say if these were sort of attached like this, and this was all just one sort of market we were looking at, as soon as price breaks this high, that's a signal that the bearish trend that we were, involved in, that we'd entered in possibly earlier, it's the first sign that this trend is failing and that we are likely to now flip bullish. So if we have the break of this high, this is the best sort of place to get out of the market. Obviously, ideally, you want to be getting out of the market at the low, as this is the sort of maximum profit you'd be able to take. However, trying to identify the low in a trending market can be very difficult, and it brings a lot of subjectivity into your trading. There may be times where you identify a supply or demand zone or a low of a higher time frame trend that you're looking at for your profit target, and price may reach it, but price may continue on way beyond that, and you'll be thinking to yourself, oh, if only I'd stayed into the trade and carried on with the trend for as long as possible. By using this method of following the most recent high and most recent low, you're able to sort of maximize as much profit as you possibly can out of that trending market before the trend eventually fails. So now for the bullish example, it's very simple, very similar as well. We obviously start with our low point where that bullish leg sort of starts, and we have our most recent high at the high point of that leg before the retracement starts. And then as price retraces, again, we're just sitting on our hands, not doing anything. We're waiting for that bullish break of structure. And once we get that, we can then move our most recent high to the new high point, and we can move our low to the new low point, which would be the lowest point of the retracement. Same thing, once we've had that break of structure, we're just sitting on our hands, waiting for that next break of structure, either a break of the high as we're in the bullish market, or price may break that low and flip bearish. But obviously, as you can see in this example, we continue bullish, we make that break of structure, and we've got our new most recent high, and then we can then confirm our new most recent low as the lowest point of that retracement. And the same process again, once we get that break of structure to the upside, we can move our most recent high to the highest point of that leg, and we can move our most recent low to the lowest point of the retracement we just had. So very simple. Obviously, the pullbacks will be more complex than this typically in a live market, and you'll typically be trading with candlesticks rather than line charts. But hopefully this example has given you a bit of a nice picture of how you can use a trailing stop loss, or more specifically, how you can identify most recent lows and most recent highs. So we'll just go over a more sort of real example, I would call it. We will just get rid of these and we can add them in just a second. And as you can see, we've got a bearish market again and a bullish market, but as you can see, the pullbacks are a bit more complex than normal, at least the examples we were just looking at, and these are a bit more realistic of how the real market is going to look for you if you are just looking on a line chart. So the exact same process, we'll go through the bearish market first, but obviously you would have your high point, which is the highest point before that bearish leg starts, and you would have your low point, which is the lowest point of that leg. Now, as I said briefly before, there are two ways that you can use a trailing stop loss in this example. I'm going to tell you both, and I will tell you which one that I personally use and why I prefer to use this version. But there are two, very valid ways that you can use a trailing stop loss, and I think it's just personal preference. You can do your own back testing and see whichever one works better for you. But I will tell you how you can use either. And just for the sake of these two examples, I put in these random entry points here so that you can see sort of how we would be using that trailing stop loss in these trending markets. So in this bearish example, we've obviously entered at some point up here, whatever your trading entry requirements are, and we've got that strong bearish leg to the downside, and you've decided to use a trailing stop loss to maximize your profits from this market. And once we have this pullback and the break of the low, we can obviously move our most recent low to the lowest point there, and this is when we can then mark out our most recent high. So there are two ways to do this. The first way is you mark out your highest point of the retracement, just as we were doing on the previous example. And in this case, it would obviously be this high point here, as this is the highest point of that retracement we've had. And then with your trailing stop loss, you would simply move your trailing stop loss to just above the high, maybe a few pips above, just to give yourself that bit of protection from spreads. And this is where you'd be locking in your profit. So obviously, for the sake of this example, we would have 3% locked in. However, there is another way you can decide to use a trailing stop loss, and this is actually the way that I use in the live markets. I don't move my stop losses or use my most recent highs on the highest point of the retracement. It may be the highest point of the retracement, but what I'm looking for is that final sort of counter retracement candle, the final sort of flip zone, maybe, if you want to describe it as that, within that move. So for the sake of this example, I would actually be moving my most recent high to this point here. As you can see, this is that final sort of counter retracement move before we have that break of the low. So in this example, I would obviously then be locking in slightly more profit. And the reason I say this is more aggressive is because if price does break this high, we have technically got a change of character, but we haven't necessarily got that break of structure yet. But the reason I like to use this in a trending market is I sort of want to maximize my profits. And I also want to be getting out of the market at the first possible sign that that trend is failing. So I'm more than happy to be slightly more aggressive with my targets there. Obviously, you can keep them above that high if you want to, and that's being slightly less aggressive, a bit more conservative. But, you know, for me in these trending markets, especially when price is running nicely in profit, I'm more than happy to be slightly more aggressive and take those profits when I can. So for this next pullback, obviously, we have our more complex retracement and we have our break of the low. And as soon as we have that break of the low, we can move our most recent low. And again, for this example, there are two places you can possibly put your trailing stop loss or mark your most recent high at. And you've obviously got the highest point of the retracement here, which would be this highest point here. And if you were doing that, you would obviously move your trade along and you would put your stop loss, you know, just a few pips above that to be safe from spreads. But as I said, with the way that I use it in the market, I'm always putting it on that final sort of counter retracement candle or counter retracement move. In this example, obviously, as we don't have candlesticks, but it would be this high here as it's that final sort of high before the strong bearish move to the downside, which again means I can lock in slightly more profit, slightly more aggressive, and I'll be taken out on that very first sign that the bearish trend is failing. And now if we look at our bullish example, we have our high up here and obviously our low point. And again, I have put in a random sort of trade entry, you know, no specific criteria for that. Let's just say you are in a bullish position here, you're in a long, and you are trying to make the most out of this bullish trend that you have identified. And once we've had this push to the upside, we've got our retracement, waiting for a break of the high so we can move our most recent high. And once we get that, we can move it to the high point here. And then we need to mark out our new sort of most recent low. And the first place you can obviously move is to the low point of that retracement. As you can see, this is the lowest point of that retracement. However, you know, as I was just saying, I'm more than happy to be a bit more aggressive. So I would move it to that sort of final low, that final counter retracement move before that break of structure. And you would be locking in your profits, again, just a few pips below that, to be looking in profits for any time that price may give you that first sign that the trend is about to change. And again, we have a slightly more complex pullback, and then we eventually have that break of structure, the break of the most recent high. So we move our most recent high to this new high point, and we then want to be looking to lock in more profit with our trailing stop loss. And obviously you can move it to the low point here, as this is the lowest point of that entire retracement, and you would be locking in your profit, you know, a few pips below that again. Or as I say, I want to be a bit more aggressive, you can move it to that final sort of counter retracement move before that bullish break of structure, and you're able to lock in slightly more profit and be slightly more aggressive with how you are going to be taken out of the market. So this is pretty much how you would use a trailing stop loss in the live market. Depending on you, what you want to do, you can use it on the high point or the sort of low point of the retracement, or you can use it on that final sort of counter retracement move before that break of structure. It's completely up to you. I would advise, you know, backtesting your strategy, see what works best for you. Also depends on your trading style. If you want to be more aggressive with profits, that's fine. But, you know, you have to understand that sometimes price may come up and spike this high or something, not actually give a confirmed break of structure, so a bullish break of structure in this bearish example, and then continue. But you just have to understand that that's the case sometimes. It's never going to be, you know, 100% foolproof. But yeah, this is the line chart example. Hopefully that explains it in enough detail for you guys, and I will just now run through a live example for you. So guys, I've just pulled up a chart on Euro Japanese yen, as you can see up here, and we're on the 1 hour time frame. And I thought I would take you through a trade that was actually sent to the Discord server last week. And it was a trade that, used this trailing stop loss really well, actually. And we were all able to actually catch a really nice amount of percentages from this single trade alone. I'm not going to go too much into detail about the actual entry requirements that we were looking for. Very, very briefly, I will say we were looking for a larger ascending channel, which we then had a smaller ascending channel with inside, and we were wanting to see a break of the most recent low, a retest where we would get involved, and then we would ideally like to see that bearish trend sort of kick in, and that was when we would be using our trailing stop loss to lock in our profits along the way. So the way we'll start with this is simply by marking out our most recent high and our most recent low. And as you can see, we've had this strong move to the upside. This is where that larger ascending channel has formed, where we've had these corrective breaks of the high. We've then come into this much sort of smaller, tighter ascending channel, where, as you can see, we've got these breaks to the high, but retrace, break to the high, retrace, break to the high, retrace. Very corrective price action. Price isn't showing any sort of momentum to the upside at all. We eventually come all the way up to our high point up here, which would be our most recent high that I would be marking out here with that horizontal ray. And then for our most recent low, as I say, I'm much more aggressive of how I mark out my most recent low. Some people will be looking at the swing low, which may be this point here, or maybe even this point down here in these retracements here. But for me, it's literally that first retracement candle we have. So in this bullish market, it's that first candle that's failed to break the high. And as you can see, if we follow it up, we have this little inside bar candle here that has clearly failed to break the high of that previous candle. So it's therefore a retracement candle, and for me, the low of that candle would be the most recent low. And as I said, what we were looking for in the example of this trade is a break of the most recent low and a retest. I'm not going to go into any more detail about that. If you would like more detail about how we got into the trade and how we managed it, etc., be sure to join the Discord server. It was involved in the weekly trade recap I released that week, and I did a full breakdown of the trade and how we managed the entire trade. So if you want a bit more detail, be sure to join the Discord server, ask to be added to the VIP membership, which is currently completely free. And you will then have access to those weekly trade recaps. But, for the sake of this example, we shall carry on. And as I've said, all we're looking for is a strong sort of impulsive break of that most recent low. And we will look to get involved on a retest. So we'll just play price forward. And as you can see, the very next candle, we get a really nice break of the most recent low. If I zoom in a little bit, you'll be able to see a bit more clearly. But we had our inside bar as the most recent low, and price has clearly broken through it with quite a bit of momentum. And it's also closed with a really clean candle, which is just the type of thing I want to see on this strategy. So let's say we're just going to enter straight from the most recent low. We'll move this along. And as well, we will also want to put our stop loss. I can't remember exactly how large it was. I think it was around 15 pips. So we will do, if we can get it on 15. There we go. We'll do 14.9 pips. That's as close as we're going to get it without having to go a bit more specific. But yeah, for this example, it was around 15 pips on the trade that was sent to the Discord server as the signal for all of the members. And yeah, this was when we were just waiting for price to retest in. Obviously, we've had that break of the low. So we would be moving our most recent low to this point. Our high would stay in the same place for the moment. And we're expecting price to tap into our entry, and hopefully we get a nice bearish trending market begin to form from this point. So as you can see, the next candle doesn't actually tap us in just yet. But I think the next hour afterwards, you can see price has literally just tapped us in. Or maybe it hasn't on that candle. Was it the next candle? Yes, sorry, it was the third candle that then came back and tapped us into our position. So at this point, we are now in our market, in our trade, sorry. Our new low would be at this point here, as this is the lowest point of the market, and all of these have broken the low. So they're all part of the same trend. And now we've had our sort of retracement. We are waiting for price to fail to break that low. And then once we break that low properly, we can then move our trailing stop loss and either lock in some profit or possibly reduce our risk. So we'll just play price forward. And as you can see, we have a very small little range. I think this was sort of near the end of the day. So yeah, this was over sort of spread hours, which is quite likely that we sort of get. Usually typically get a range over spread hours. And then as you can see, we have the break of that low. And once we have the break of that low, we can move our most recent low to the new low point. And the next thing we want to do is to move our most recent high. Now, as I say, I'm always looking for the first sort of counter retracement candle. And so what I want to see is the candle that, failed, that has a lower low than the candle before. So all of these, you can see the low is slightly higher, slightly higher, slightly higher, but then that low is way below. So this is our retracement candle here. And this is where I'll be moving my high to. However, as you can see, the candle to the right of it does have a slightly higher high. So I would be moving my trailing stop loss to this point here. And this is when I would then move my stop loss to actually reduce our risk slightly. So I would have our stop loss just above. And as you can see, we've gone from about a 15 pip stop loss to about a 7 pip stop loss. So we've pretty much halved our risk in the space of a few hours, which is really nice. And obviously, if price then breaks through here, I'm more than happy to be taken out because that bearish trend that we're expecting has failed. And we are now flipping bullish, and that's not the type of market I want to be getting involved in. So as price continues down, we keep moving our trailing stop loss to go with every break of the low. As you can see, we would keep moving it. Our high would stay at the same point, as this is still the first retracement candle we have within that move. And we are just waiting for a retracement move, which is where this low isn't broken. So it doesn't even have to be a bullish candle. It could technically be a bearish candle or an inside bar. We're just waiting for this low, for the next candle to fail to break this low, which is what I class as a retracement candle. So this is exactly what we get here. It is a bullish candle in this example, but as you can see, we've clearly failed to break that low. So this is my retracement candle, and then this is where I'm just going to wait for price to do some sort of retracement, and then ideally break that low, and we can lock in some more profits or reduce our risk further. And as you can see, the very next candle, we get a break of that low. It doesn't matter that it's only a wick. As long as it breaks the low, I'm more than happy to move my most recent low point. And obviously the next thing we would do is we would move our trailing stop loss to the high. The candle I would be looking for would be this inside bar. However, as the next candle has a higher high, I would be moving it to that point there, just because, price may spike slightly in there. And this is when I would, I'll move my stop loss back to what it was, which was 149. And I would move my trailing stop loss to just above that point, and I would be locking in some profit. So I think at this point in the trade that I'd sent to the Discord server, we had locked in about 3.7% roughly. Obviously, I think our entry and stop loss was slightly different to this example that we're looking at, but it was pretty much the exact same. And I think we had locked in about 3.8%. And this was sort of Thursday overnight, coming into Thursday morning. And yeah, same process. We're just letting price continue down. I think we do break the low here slightly. Yeah, if you're ever unsure, you can always check these, values up here. The L is obviously the low. In this bearish market, we always want to see the candle break that low. Otherwise, it is a retracement candle. So it doesn't matter that this candle is bullish. It's still broken the low. It's still part of that bearish trend, in my opinion. And this is when we get that retracement candle. And as I keep saying, we are just sitting on our hands. Obviously, as I said, if you decided to put it on that inside bar rather than the high, you would have been taken out here, which is why I like to put it on that high, as this is the, the final sort of flip before that break of structure. And we're just sitting on our hands, waiting for price to break the low, as it does here. Again, only with a wick, but I'm more than happy to keep moving my trailing stop loss and locking in more profit. Obviously, this time only locking in slightly more, around 4%. But, we just continue doing this until the trend fails. And as you can see, we then get a really nice impulsive move to the downside. We can continue to move our most recent low to follow this trend. And as you can see, we're getting some really nice momentum into the market now. And the important thing is, though, that even though this trade is seeing a lot of momentum, as you can see, we'd be running at about 12/13%. We're still only locked in at 4%. So you've just got to stay very patient. Don't become impatient and start closing your positions, because as you will see, you may close your position early, and then you'll be kicking yourself in the foot when price ends up going, 20%, and you'll say, why didn't I keep my position open? I've missed out on all of this profit, and you'll be very frustrated. Now, this was CPI, I believe, so a quite ugly news candle. As you can see, we've got large wicks on either side, but, we're still following the low. It broke the low, still part of the trend. We're more than happy to keep trading the way we are. And this is when we first get that retracement move. And now we are waiting for that break of the low so we can lock in some more profit, ideally, which is what we get here on Thursday at around 5 o'clock. We finally break that low, even though it's just a wick, we're more than happy to move. And then we're following the lows back up. As you can see, the lows are higher, higher, higher. And then that's when we have a lower one. So where I'm moving my most recent high to would be this inside bar. Yes, we have this higher point here, but that is of a candle that's not part of the retracement move, it's not what I'm interested in. The only time I'm going to move my stop loss slightly higher is if there is a higher point to the right. So this is where we now lock in some really nice profit. We came down to around, I think it was about, 10.7% roughly, locked in within, I think, less than a day in this time. Yeah, about 24 hours, 11% locked in on this trade. And yeah, we just simply continue going. As you can see, we do break the low of that candle, and then we get our next retracement candle. So all we're doing is waiting for a break of that low to lock in some more profit. As you can see, we have a very small little range, and then we have a nice sort of impulsive break. Although, as you see, it did literally just flip to a big wick. But we're more than happy to lock in our profits, and we will move our most recent high to that first sort of counter retracement candle, which actually is this candle here. As you can see, this low was higher, but the next the previous low before that was lower. So this is our retracement candle that we're looking to get involved in, and we will move our stop loss to just above this candle's high, which again, we had locked in about 13.9% now on this trade. And as I was in this trade, and I was seeing this form, and this is a nice descending channel now, so it's sort of the same as this ascending channel, but the flip side of it, and as you can see, we are breaking the lows very correctively, especially this candle here. We broke that low, and as you saw, it looked like really nice momentum if you're looking at it before that hourly close. But as soon as that hourly close came in, we had that huge rejection, showing that price doesn't really want to continue down. So at this point, I was expecting price to actually break this high, and I was more than happy to be taken out for a really nice 13.9%. But, I continue trading, seeing what the markets give us. We never really know what's going to happen. It's always completely random. Each trade is completely independent, as always. And yeah, we just continued playing price through. As you can see, we had a very strong bearish candle, but it didn't break the low. So we weren't moving our stop loss just yet. And price ranged around very slightly. And then we had a nice impulsive break of the low. So the bearish trend was actually continuing at this point. And once we have that low, I'm moving my most recent low to the lowest point, and I'm then moving my most recent high to the first sort of counter retracement candle we have. And that's obviously going to be this inside bar candle here, as we have that low, but then this low of the previous candle is obviously lower. So I'm moving my stop loss to the high of this candle, and we're locking in some more profit at about 15.8% now. So a really, really nice trade here. It's just playing this trend, trying to get the most out of it. If you're going from support and demand, support and resistance, you would most likely have been taking your full partials around this area, which still would have been really nice. 15% if you had identified this demand zone as where you want to be exiting the trade. But, with a trending market like this, I really want to be using this trading stop loss to sort of take the maximum sort of profit that I can out of the market. So as you see, price continues down. We get that retracement candle here. As you can see, the low has failed to be broken. So now we're just waiting for price to break that low after this retracement that we're having. And as you can see, price eventually breaks that low again with a very large wick. So not much momentum, but we are still in that bearish trend. And I moved my most recent high to this high point here, as that is that counter retracement candle that I keep talking to you guys about. It is that highest low with that highest high point. And again, we're locking in even more profit now. We're locked in at about 19.6 R now, which is just, really, really good profits from a single trade, let alone, being able to make 19.6 in a month is good enough as it is, let alone from a single trade. So this was really good. And I was really happy to see that quite a lot of people in the Discord server were able to catch this trade. And a lot of people actually made some really good profits from this trade. So we've got this bearish market. We're starting to see some weakness with these wicks. Price may flip bullish now and we may be taken out, and I'm more than happy for that now, especially with this profit locked in. But I will continue sticking to my plan, this trailing stop loss. As you can see, this candle actually fails to break the low, so it is technically a retracement candle, despite it being a quite strong bearish candle. It's still retracement candle because it failed to break that low. And as you see, we then break that low here with a nice amount of momentum. So we can move our most recent low down here, and we can again move our most recent high to lock in some more profit. So at this point, I think we were locked in at about, 21.8 R, 21.9 almost. So really, really nice. And this is now coming to the end of the week, where we're probably going to see a bit of a range. But as you can see, price continues down with some nice momentum. All of these candles are breaking the low, as you can see. We do have a bullish candle here, but it has broken the low. So it's still part of the bearish order flow. and we are now seeing that retracement. And this is coming to the end of the week on Friday, as I said. And as you can see, we then come into Sunday here, and we've still got our our profit locked in here at 21.8%. If you wanted to close before the weekend, if you don't like holding over the weekend, I think I said to our members they could do that, and that was at about 26.8R. So a huge trade. Pretty ridiculous amount of profits that we were able to achieve on this trade just with this trailing stop loss. But coming into the new week, you can see we've got our high up here, our low down here. We're just waiting for a break of either. More than happy to be taken out now, or more than happy for this low to be broken and to lock in some more profit. But either way, just waiting for the market to do its thing. And as you can see, on Monday morning at about 8 o'clock, we were eventually taken out of our position with our trading stop loss for a total of 21.8R roughly. And yeah, really, really nice trade. I think it shows perfectly how these trailing stop losses can give you that sort of maximum profit from a trending market. And yeah, hopefully you guys understand how you can use it in a live market. Hopefully this trade example has given you, a closer insight on how it works with candlesticks and more realistic sort of price action. If you have any questions at all, be sure to drop them in the comments, and I'll be more than happy to help you out. And obviously, if you want to be getting involved in trades like this and be able to receive the signals for the trades like this, be sure to join the Discord server, as this trade was sent as a free signal to the Discord server. And I'll post in a little video now of the signal and the different sort of trailing stop loss signals that I was sending for people to lock in more profit. So guys, this is the Discord server. This is what it looks like when you're inside. Currently in the free access part of the channel, in the free signals channel there. VIP access, as I said below, is currently free at the moment. You just need to join the Discord server, send me a message, and I'll add you straight away. But here is the EURJPY signal that was sent to the free access free signals down here. As you can see, we had the entry, the stop loss. There was no TP because we were using that trailing stop loss the entire time. And yeah, these are the signals I was sending, where I was telling people to move their stop loss up to either reduce risk, as you can see here, or to continue locking in more and more profit. So, we had 3.59, 3.77, 9.5. This is where I locked in, some extra profit because we had some news release coming and I didn't want to risk my funded account, getting blown by any daily drawdown limits. We were then locking in more profit, 10%, 13%, 14.8%, 18%, and then like 20% down here. And this is when I said, if you don't want to hold over the weekend, you can close now for 26% profit. And I think some people did close there. And then, we can see we came into the next week, 16th of January, and our trading stop loss was finally triggered for a total of 20.34%. And, there were lots of people that were able to get involved in this. So yeah, be sure to check it out. As I said, there's a whole range of stuff that we've got here. Lots of stuff for, text channels and results and VIP membership. And we've also got some voice channels as well, where you can get in calls with some other people. So guys, that wraps up today's video. Hope you found it useful. Let me know if you're going to start using this in the live markets. And if you have any questions or suggestions for future videos, be sure to drop them down in the comments below. And as always, like, subscribe, and be sure to check out the Instagram and Discord server. Cheers guys.